Technical analysis for gold and US dollar Swiss franc with resistance support levels. Gold. Gold price has fallen significantly to nearly $2,010 during the early European trading session. The precious metal will likely face increased selling pressure, potentially finding support near the psychological level of $2,000. The negative bias for gold prices has been influenced by geopolitical tensions between the United States and China. China is expressing discomfort regarding U.S. arms support to Taiwan. In response, a Chinese Foreign Ministry spokesperson stated that China would take decisive and effective measures to protect national sovereignty and territorial integrity. This has unnerved market sentiment, impacting risk-sensitive assets. The US dollar index is attempting to maintain its position above 102, while the 10-year U.S. Treasury yields have dropped below 3.3% again due to expectations that the labor market is no longer extremely tight. In addition to the softening U.S. labor market, recession concerns have intensified. Slowing economic activities, driven by the Federal Reserve's higher interest rates, are contributing to a potential recession in the U.S. economy. Although market participants expect a neutral stance from Federal Reserve Chair Jerome Powell for May's monetary policy, Cleveland Fed Bank President Loretta Mester stated in a Bloomberg report that policymakers should raise their benchmark rate above 5% this year and maintain it at restrictive levels for some time to curb inflation. Gold prices have tested the immediate support level derived from Wednesday's low at $2,010.88 on an hourly scale. The precious metal has sharply fallen below the 20-period exponential moving average at $2,017.18, while the 50-period EMA at $2,011.36 offers some support for gold bulls. Analysis for Forex pair US dollar Swiss franc. US dollar Swiss franc slips to 0.9060 during early Thursday trading, following an unsuccessful attempt to recover from a 22-month low reached the day before. The Swiss franc is buoyed by the US dollar's widespread weakness ahead of crucial employment figures. The greenback experienced a brief rally on Wednesday due to disappointing U.S. economic data sparking recession concerns. Nevertheless, the increasing likelihood of the U.S. Federal Reserve not raising interest rates in May, coupled with challenges to the greenback's reserve currency status, seem to be exerting downward pressure on the U.S. dollar. Regarding data, the ADP employment change for March fell to 145,000, missing the 200,000 forecast and down from an upwardly revised 261,000 prior. Similarly, the final readings of SP Global Composite and Services PMIs for March were also disappointing, with the former declining to 52.3 from 53.3 preliminary estimates and the latter falling to 52.6 from a previously expected 53.8. Most notably, the U.S. ISM Services PMI for the same month amplified negative sentiment as it dropped to 51.2, well below the 54.5 forecasts and 55.1 prior. Conversely, Russia's recent preference for the Chinese yuan and the China-Brazil agreement to bypass the U.S. dollar as an intermediary currency are key factors recently undermining the greenback's dominant position. In a similar vein, there are rumors that some U.S. Congress members have proposed a Gold Standard Restoration Act to protect the U.S. dollar. The bill proposes relinking the greenback to a fixed amount of gold, as was the case prior to 1971. In other news, CME's FedWatch tool indicates a roughly 57% chance that the U.S. central bank will halt its rate hike path in May. In the midst of these developments, SP 500 futures show modest losses, echoing Wall Street benchmarks. However, bond yields remain under pressure, negatively impacting the U.S. dollar. Notably, the benchmark U.S. 10-year Treasury bond yields have fallen for 5 consecutive days, reaching a 7-month low on Wednesday, while the 2-year equivalent has also been on a 4-day downward trend, recently bouncing back from 3.79%. Looking ahead, the Swiss unemployment rate for March, anticipated to remain steady at 1.9%, will be followed by U.S. weekly initial jobless claims, influencing intraday moves for the U.S. dollar-Swiss franc pair. Nevertheless, the primary focus will be on Friday's U.S. non-farm payrolls report for clearer direction. Thank you for watching this analytics. Our company specializes in providing signals for trading in all financial markets such as Forex, stock market, and crypto. You can find the whole article at the link in the description. You can also like this video and subscribe to the channel.